The 6,500 level remains the short-term target for the S&P 500. That is the largest gamma exposure concentration. You can also see ever since the August 1st low, the S&P has just been hugging this 50-period EMA on the 15-minute chart. We like to use the 15-minute candlestick chart to gauge shorter-term intraday trends, especially on the major indices like the S&P. And so even though this morning we saw a gap higher followed by a pullback, we did bounce just above that 50-period EMA, with the S&P closing at 0.32% at 6466.58. And if we just come over here to our daily candlestick chart and zoom out a little bit, I just want to take a look at the gamma exposure data as it's progressed from basically from the at-the-money strikes right around the 64.50 level and higher. You can see basically all the gamma exposure is skewed to the upside, and this is on a net basis, but this is very telling. We see that big 6,500 level here, but look at 6,600 and look at the 7,000 gamma exposure level. I know these look relatively small, but the fact that these far out of the money strikes continue to grow just shows that there's a lot of call buying and call selling at these strikes. Either way, this participation basically signals that market participants believe higher prices are likely coming into year end. Another point I want to make on this daily chart is that we've rallied really nicely after this dip the previous Friday. Didn't quite make it all the way down to the 50-day EMA. This is another longer term time frame that we like to look at, still keeping with the 50-period moving average on the daily candlestick chart. But now after the rally over the past week and a half, we're around 250 points above the 50-day EMA. So usually when we get this stretch, we see either some sort of consolidation or some sort of pullback, at least attempting to get close to that 50-day EMA level. Turning over to the VIX, volatility remains exceptionally low. The VIX down 1.63% today. So we're below 15 on the VIX. This is a level not seen since basically the beginning of the year. The largest gamma exposure concentrations are at that 14 and 15 strike, and not seeing a tremendous amount of volume at higher strikes. Primarily, the largest volume we saw was at the 20 strike. This is significantly different than about a week ago. We were seeing a lot of volume coming in, at the 30, 35, and 40 strikes, and that was after this spike that we saw back on August 1st. So as vol sellers have ramped up their selling in the last week, we've seen market participants basically becoming less and less interested in buying upside VIX calls, and that's being reflected here in the gamma exposure data as well. Next, let's take a look at a few names that we are actively monitoring and trading in our portfolios. We'll start with Apple. Apple up 1.6% today at 233.33. We see the gamma exposure really growing now. This stair-step pattern in the gamma exposure data basically just points to interest building at higher strikes further out in time, and is suggesting that market participants expect price to follow up the options chain to higher strikes over time. Taking a look at the options volume, we saw quite a bit of volume at the 235 strike today, as well as the 240 strike. So definitely a lot of interest in higher prices for Apple. This is a name that we've actually traded a wheel strategy on several times over the last few months, and we're about to reinitiate a wheel strategy by selling puts, probably either the 230 or 235 strike, and we'll be targeting one of the expirations into the end of August, either the August 22nd or the August 29th expiration, allowing us to really collect some nice premium as Apple trades around these levels. Of course, if we get assigned the shares, then we'll begin selling calls against those underlying shares. Speaking of a wheel strategy, Amazon is another name that we've actually been trading a wheel strategy on. So if we zoom in the chart here, we can see yesterday Amazon came down to the 50-day EMA around the 220 level. 50-day EMA is actually at 219.05, and that's where we initiated our short puts. You can see gamma exposure is all skewed higher, volume coming in at higher strikes, and so this looks like a pretty good potential trend starting, maybe filling this gap left over from the earnings released a couple weeks ago. And so just to give you guys a little bit of a peek into our strategy, this was yesterday. We initiated our wheel strategy, as I mentioned, by selling 5 of the August 29th 220 puts. And so Amazon was trading at 222 at the time. You can see the gamma exposure picture shifting higher in real time on our platform volume also coming in at these higher strikes. I know this is a little small here from our Discord channel, but essentially we sold those 220 puts at $3.45. So those are already working well for us, especially after the big move today. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member, link in the description below. Next, let's take a look at Robinhood. Robinhood, pretty big down move today, down 4.79%, closing at 108.62. We were discussing Robinhood in our live stream this morning, and despite this big down move, the gamma exposure picture is still skewed higher all the way up to the 120 strike. So this could be the start of a little bit of further of a pullback, but anywhere in this 100 to 105 zone, I like for a potential swing trade entry, for a potential move back up into these levels. Robinhood is one of those names that really needs market momentum in its favor. We really don't see this stock bucking the trend in any kind of way. This is a purely momentum risk on type of play. But even on this down day, market participants are still loading the boat in the options market from the 110 strike all the way up to the 120 strike. So that's really telling that even though the stock sold off quite a bit today, there's still speculators coming in at higher strike prices. And so we think this may have a little bit further to go, but our lower dealer cluster zone is down here around the 100 level. And we think this is actually a pretty good support zone between 100 and 105. The 50-day EMA is currently at 93.86 and rising quickly. So within the next few days, this could be approaching that 100 level, and that could be potentially providing some support if price does come in a little bit further. So this is definitely a name that is on our watch list to add into our portfolio. We'll probably look at a potential play either into the end of August or maybe even into the September 19th expiration. And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We just extended this promotion and we do have a few spots remaining, so definitely take advantage of it while you can because it will be ending soon. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our Discord community. You can track our trades in real time and see other trade setups by a lot of the great traders in our community. I'll put links in the description below to all of that so you guys can check it out when you get a chance. Thanks so much everybody for watching, and we'll see you guys in the next video.